Hello gang, Manja here at FOREX TRADING. Thank you for joining me on this week's market preview video. In this week's video, what I'm gonna do is that I'm gonna keep this video short and sweet because I caught a little bit of a flu and I don't want to ruin this whole video because of my scratchy voice. Okay, so what we're looking at here is the daily time frame of the USD Swiss franc pair. Daily, the market has been going bearish on this particular pair. On the daily time frame, I want to look at three things. I want to look at what is the market doing and where is the market more likely to go. Okay, so let's analyze what is the market doing right now. As the market came right here, okay, we had a little bit of retracement. Okay, after retracement we have a retest of these highs right here. We have equal highs. Okay, this signifies a halt in the market. A zone that I'll be paying much more attention to is this one right here, and as you see, price began to resist exactly to these particular zones. So my first shorting opportunity would come over right here where the market is currently sitting at right now. Okay, as you pay closer attention, you would notice that these candles are a quite significant indicator that price has indecision in the market. These are my favorite candlesticks patterns right here. As the market came and made a top out, we have a doji candle over there. Okay, basically a doji candle signifies an indecision in the market, right? You tend to get pretty significant trading opportunities with these type of candlestick patterns. And what happened here is that price went up, gave us this candlestick pattern, then came down and then retested those resistance levels right here with this very same candlestick pattern, which is a doji candle. Okay, so as I know that the market has been going down for quite a while and we have hit our previous support level and we made a resistance with this double top, I will be looking to go bearish. Okay, so knowing that we have our lower close, then a retest, where is price more likely to go? And again, I'm gonna pause this video for a little bit so you could guess exactly where the market is more likely to go. And then now, right, if you thought of this particular relief right here, you probably thought the exact same thing that I was thinking. I'll be looking for a shorting opportunity in anticipation of a retest of these support levels right here. So as I go to my 4-hour time frame, you would notice that on our double top, okay, on our double top, price gave us an oversold state right here. Okay, and as price did this, and as price retraced for a little bit, it retested these levels of structure. On our RSI level, we have lower highs, lower than this previous high right here. Okay, what do we call this, guys and gals? Bearish divergence. Okay, bearish divergence, right? Another thing, confirming these levels of structure, I will be having a ABCD pattern, then extended equally where exactly at these resistance levels that we identified right there. Okay, as I take my Fibonacci extension tool from this swing low back to this swing high, and I take it back to the swing low, you would notice I have a 1618 lining up exactly where market has resisted with this wick right here, but our ABCD pattern hasn't quite reached that level right there. So from this level, we see that this particular level right here is quite significant right there. All right. Okay, so as I go down to my lower time, my trading time frame, I'll be looking for specific techniques in order for me to take advantage of this particular shorting opportunity. Okay, so how will the market go to our anticipated take profit levels? Price could eventually shoot straight down. Okay, thus you'd want to if you are an aggressive trader, you might want to enter short as soon as the market opens. Okay, as the market opens on Monday, enter short with stops higher than this high, probably at 43 pips, then targets over to these levels of structure in order for you not to miss out. If you're an aggressive trader, you might want to enter short as soon as the market opens. Okay, with a risk to reward of 90 pips worth of reward and a 43 pip worth of risk, which is a 1:2 trade risk to reward. Okay, if you are a conservative trader, I personally will be looking for a double top within that larger double top that we had from here to this level right here. Okay, so I'll be looking for something like this, at least a touch at our bodies right here, and I'll be entering short. Okay, I'll be entering short in anticipation of a retest of these lows right here, and a stop loss of 11 pips. Let me go here, and a stop loss of 20 pips, 21 pips worth of risk on this one, and a 54 pip worth of reward on this one, which would be my first targets right at these levels of structure. Okay, then if I wish to take extended targets, I would take extended targets back at these structure levels right here. I'll be shooting for 106 targets at 94.34 levels right here, which would give me a 1:5 risk to reward on this one. So if you take a look, let me put this one here. Okay, if you take a look at these two examples, you would notice that an aggressive trader would be taking a much bigger loss if he gets stopped out on this one, which is a 44 pip stop loss. Okay, but a conservative trader, which is like me, would have had a trade of 21 pips and would be risking less on this particular trade and having much more on the upside, which is a 106 worth of reward, and this one would be having a 90 pip worth of reward on this one. So I hope you liked this video, and if you did, press that like button below. Subscribe to our channel by simply searching FX Link, and you would get it on YouTube. There's massive amounts of content over there. I hope you take a look over there and subscribe so we could get more of these videos on a daily basis. So without further ado, this is Mandla Msibi, and I'll see you on the next trade. Goodbye, traders.